Welcome to the June's edition of the Lancaster and Morecambe Housing Market Report. June was the month when the Bank of England rose the interest rate for the 13th consecutive month. Most of us expected it to happen, we just didn't expect it to be 0.50%. Across the UK, estate agents have reported different reactions in the housing market. Different regions of the country are performing very differently. Agents in the south are reporting a fall in property prices of around 3.5%, where agents in Scotland are still seeing many price rises with multiple bids being made on properties. It really is a story of two halves. At JDG though, we cover both Lancaster and Morecambe, and whilst these two towns are just 3 miles apart, even they are starting to perform very differently. The two main questions though we are now getting asked are: what is happening with property prices? What will happen with them? And there's a third: are homes still selling? Let's start with property prices. Across Lancaster and Morecambe, property prices have remained stable since the start of the year. In Lancaster, prices have dropped marginally, a mere £110 from last month, hence I say stable. In Morecambe though, they've actually increased by £840, but Morecambe's had previous dips, so again since January, very stable. What we must remember though is that this data is based on completions, not current day sales, so we do expect to see it dip as the year progresses. The average price of a home in Lancaster is now £179,338, whilst over in Morecambe the average price is now £165,077. Let's take a look at some key figures. So if you look at the chart on my virtual whiteboard, you can see that Lancaster and Morecambe have been performing very differently. In Lancaster, new listings are down on last year, yet sales are up. If you look at it as a crude percentage, you could argue that the properties listed turned into sales at a rate of 86.7%. However, look at Morecambe. This is concerning. New instructions at the highest rate in 5 years, yet sales agreed at their joint lowest in 5 years. The churn rate as a crude percentage is a mere 50%. Look now at the daily views. There are considerably fewer buyers looking online than there were 12 months ago. The market has changed. Lancaster may have performed well, but please let's not be fooled. The economy overall is bigger than us. The good news though is people do still want to move. Hence, you now need a proactive agent that understands how to work in this tougher marketplace. At JDG in June, we registered 205 new buyers. That number is really important. Once again, we sold 37 homes. We actually need more homes to sell. We actually sold more than we listed. So now, can we help you move? Please click the links below where we break down what is selling, where it is selling, and importantly, what price range is selling. As normal, if there's any questions, please ask me. Otherwise, I'll see you on next month's monthly market update report. Thanks for watching.